Hi there everyone and welcome to this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances and you need to decide for yourself whether it's appropriate to you. Okay, so our market today managed to push up just slightly. Okay, it gave back most of the gains from early in the day and just hung around 7,500. And look, there's no real surprise here at the moment. So a few things I'll just point out. Technically, we're still on an uptrend. That uptrend is still intact. We've come back to pretty much test that. We've tested key level of support near 74, and now we're finding a bit of buying coming back in, although momentum is very low at this stage. Okay, so really we're stuck back inside of a triangle pattern between 76.33, the all-time high, and 74, all this uptrend line coming through here as well. So I suspect we'll stay range bound within this range for maybe 2 or 3 weeks here. Seasonally, we typically get some sideways movement at the end of our reporting season coming into the dividend period. So really no surprise here to start seeing that happen already. The pullback last week, I guess, was probably a bit overdue, especially in the US markets I'll talk about in a moment. So we needed that pullback. The pullback's taken the heat off that move up a little bit now, which is quite healthy, and now I think we're going to go into one of our typical sideways phases. And if you look back over this trend, we've seen this a lot. Push up, sideways, push up, sideways, push up, sideways. Right, I think that is what's on the table for at least 2 to 3 weeks here. So we're starting to set up strategies that we use options to trade sideways movements. They're called a short iron condor. We can also do it by setting up just a bull put below support levels of 74 as well. So look, there's a few strategies that we like to do. If you want to learn more about that, get in touch. We did run a webcast on that a couple of weeks back as well, so check out our YouTube page for the recording of that. Okay, so let's jump across to the US market. The S&P 500, okay, sort of similar deal. We had a bit of a pullback last week. We've hit trend and we've bounced back off. The difference with the US and our market is they've actually got some momentum behind the move, and now they're testing the all-time high. So tonight, given the strong futures we're seeing at the moment, there's a high chance we could break through into all-time highs for the US, and then the sky's the limit once again. The moves in this trend seem to be getting shallower and shallower as we go up though, guys, so I'm not expecting the same type of strong momentum as we saw back in the April type movements. I do suspect the movements to be a little bit more shallower as we go along. But look, at this point in time, we could see a disconnect. The US market could easily drive higher while we hang around in a bit of a range-bound market as we get through our dividend period. Understand the dividends aren't as big in the US, so you don't see as much of a drag on their index compared to what we see locally here. Okay, so just to talk to some of the main things affecting sentiment in the markets at the moment, the number one thing I think right now for us is the vaccine rollout. Locally, we can see that our daily cases are starting to get a bit out of control in New South Wales and Victoria, and what we're hearing now from the state government, so from Gladys in New South Wales, from Danny Andrews here in Victoria, and what Morrison's message is that if we can get to that 70-80% mark in vaccination, then we can start moving out of hard lockdown situations of what we're seeing at the moment and go into more of a softer lockdown scenario, and then from there we have a plan on opening the country back up, opening the states back up, and finding some form of new COVID normal. So it's all really coming down to that at the moment. That's putting a little bit more optimism back into the market. So yes, we are in hard lockdowns, but no, we don't feel we're going to get any crazy selling on the back of that like what we did last year. There's still There's still government benefits that you can apply for if your state is in lockdown for more than a week. That's helping things tick along, right? So remember, I'm talking about this from a stock market point of view. Yes, this is going to hurt certain parts of the economy. Yes, small businesses are getting hit pretty hard on the back of this. But at this point of time, the bigger companies on the top 200, the vast majority, are likely to either do well here or hold their ground and do well next year. So, when you're looking at this scenario right now, the trade really is on the market in behind the travel stocks. Okay, you're seeing them move up 2 days strongly in a row. Okay, so keep an eye on Qantas, Flight Centre, Webjet. They're the stocks to watch right this second as we're talking more and more about what life looks like on the other side of this year when we've got 70-80% vaccination rates. Miners took a big hit last week. It was a perfect storm for the miners after BHP reported. BHP came out with a wrecking ball of information, right, for the market to digest between merging their oil assets out into Woodside, between buying back their London listing as they are a dual listed stock. They'll become a purely Australian listed stock with ADRs in London and the US. And then also some write-downs, okay? So there's quite a few things that hit, but also at the exact same time, iron ore came off its perch at 220 and came smashing back down and had a pretty big correction there. So, and just to add more pressure on, we saw copper come off quite drastically as well. So, look, all that played out last week, but this week is starting to shape up to being a very different week. We saw a 6% retracement in copper. Iron ore's taking a big run on the futures today, so we suspect the miners would be bottoming out around these levels soon. So you'd be watching those BHP, Fortescue, Rio, Mineral Resources, those types of stocks, watching them closely this week for entry signals. Okay, so miners are looking to bottom out, and quite a few of these miners are very cheap, even with iron ore down at $140. Okay, so just keep that in mind. Australian reporting is almost completed. Okay, so this week we're going to see some of the travel stocks, we're going to see some of the staples in Wesfarmers also. So this far, the reporting season's been very, very strong. The uncertainty creeps in on the forward guidance for many companies as the next 6 to 12 months are hard for analysts to predict given the COVID situation. So many companies have sort of warned to potential lower guidance on their earnings, but let's just see whether they'll beat expectations come next round or not. So perhaps what we'll see is some of the wind come out of the sails here. But at the end of the day, we're not seeing a pullback anytime soon either. There'll be something on the horizon as always, but in the short term here, we think the pullback we saw last week is it for the moment. So the next big thing really we've got to watch out for this week, and focus is going to swing back around on the central banks, which all meet on Thursday and Friday. So we're going to see some of the world central banks get together and discuss monetary policy. From there, we'll probably hear some views on what may not happen over the next 6 months. Many are expecting the Fed at some point at the end of September to start tapering their bond purchasing plan. There's a lot of mixed reviews, and I think the mood of the market and the mood of the actual Fed officials change on a monthly basis. With the increase of cases of COVID at the moment, the mood sort of really dropped back that people expect if they do taper bonds, it'll be a very small amount, and the question will be whether it would be on this year or not. Okay, the market will get spooked on any aggressive change in tonality around central bank policy. At this point of time, we don't believe anything's going to change drastically in the short term. We think for the most of this year, we'll find that the Fed and the RBA will just sit on their hands. The next big thing really to keep an eye out that will give a massive boost to sentiment is if the Biden administration can push through their plan. So we already know that the infrastructure bill is going to get pushed through. Okay, that's opened the doors to a further 3.5 trillion budget for social security measures and healthcare and things like that as well. The House will meet again later this week to help to start pushing this through. Any positive news around that will help push markets, especially in the US. So I think that's where we're on a little bit of a high for the US now, and where we could easily get into further blue skies this week is if we see that positive news flow through from the central banks, as well as Biden's plan for his 3.5 trillion budget. All right, so they're the things that I eyeball as the news hits through the week. Outside of that, yeah, things are still on the uptrend. There's a massive cushion under this market because of all of this stimulus talk and stimulus measures that are in at the moment. So we're not suspecting a big pullback just yet. There's always going to be a correction on the horizon, but we don't feel we're even close to it from a short-term perspective over the next month. Okay. All right. So that's where we're at. Thanks for listening in today. All right. Have a great week, and bye for now.